Right now in 2025, the entire pharmaceutical industry is at this massive crossroads. A huge shift is happening, and it's forcing some of the biggest players to completely rethink how they do business. So today, we're going to break down how six of these giants are handling this moment because each one is taking a totally different path. All right, let's get into it.
And what's causing all this? Well, it all comes down to one absolutely mind-blowing number, roughly $300 billion. That is the value of biologic drugs with patents that are about to expire. The industry calls this the patent cliff. And believe me, it's a huge threat for some companies, but an incredible opportunity for others. At the very core of this whole thing is a concept called loss of exclusivity, or LOE for short. And it's pretty simple, really. It's just when a drug's patent expires. The analogy here is perfect. Imagine a blockbuster movie suddenly becomes public domain. Anyone can show it now. For these drug companies, it means their incredibly profitable, exclusive products are about to face a tidal wave of new competition. Now, we're not talking about your typical generic pill here. This new competition comes in the form of biosimilars. And I love the way this is explained. A biosimilar isn't just a simple copy. It's more like a master watchmaker taking apart a complex Swiss watch and then building a perfect replica. It does the same thing, but actually making it is unbelievably complicated. And that high barrier to entry is key. So, with literally billions of dollars on the table, who's actually leaning into this new world? Let's start with the companies that are looking at this not as a problem, but as a full-on gold rush. They are jumping on this biosimilar opportunity with everything they've got. And wow, you really can't get more confident than this, right? This is from Sandoz's CEO, Richard Saynor. He's not just talking about surviving the patent cliff. No, he's positioning his company to lead what he's calling the golden decade of affordable healthcare. I mean, that is a seriously bold, offensive strategy. And they've absolutely got the numbers to back it up. I mean, look at this. Since they spun off as their own company, Sandoz had this robust operational expansion. Net sales are up 7%, their core profit margin has jumped. But here's the really crucial part. Biosimilars now make up 30% of their total sales. And the market loves it. Investors have sent the stock up 56% in 2025 alone.
Okay, but Sandoz isn't the only one cashing in. There's another company, Amneal Pharmaceuticals, that's taking a different route, but one that's also leading them right back to profitability.
And their story is all about this incredible financial turnaround. You can see it so clearly here. In 2024, Amneal had a net loss of almost $74 million. Okay, now fast forward just 1 year to 2025, and they've swung all the way to a net income of nearly $128 million. That is a huge, huge shift. So how did they pull it off? Well, it wasn't just a rising tide lifting all boats. The real engine here was a pipeline of new products. Those launches alone drove over $122 million in new growth and really boosted every one of their key business segments. All right, let's switch gears, because not everyone is playing offense. Some companies are playing defense, really acting as these architects of transformation. They're fundamentally restructuring their businesses just to compete in this new environment. And Viatris is the perfect example of this. In 2025, they kicked off this incredibly deep, company-wide strategic review. The plan they came up with is a complete top-to-bottom overhaul. They're optimizing operations, modernizing their entire structure, and, they're making some really tough calls, like reducing their global workforce by up to 10% over the next few years. And let's be really clear, this isn't just moving boxes around on an organizational chart. This kind of transformation means re-evaluating the entire physical footprint of the company. We're talking everything from R&D labs to manufacturing plants and the global supply chains that connect them all. Bausch Health's story is a little more complicated. It's really this tale of trying to grow while facing some major headwinds. So on one side, you've got revenues up 7%, and they've managed to turn a $46 million loss into a $177 million profit, which is impressive. But on the other side, they're getting hit with intense competition, so much so that they had to write down $145 million in their generics unit. They are fighting a war on two fronts. So that brings us to our last two giants, Teva and Abbott, and they really show just how wide the spectrum of strategy can be. It highlights that there is no single one-size-fits-all answer to what's happening in the industry. Teva's strategy? It's a massive, massive bet on scale. Just look at these figures.
They have 116 different product applications just waiting for FDA approval. But even more important, they think they're first to file on 54 of those. And those 54 products are generics for branded drugs that are worth over $85 billion a year. So Teva is playing a very high-volume, very high-stakes game.
And then you've got Abbott, who is playing a totally different game altogether. This chart says it all, really. Their pharmaceuticals business, the part that's most at risk from the patent cliff, is only 13% of their total revenue. Almost half their business is medical devices, plus a big chunk from diagnostics and nutritionals. That diversification is like a powerful shield, protecting them from the storm that's hitting their more pharma-focused competitors.
So after looking at all these different strategies, from the gold rush to the restructuring to diversification, what's the takeaway? What is the new rule for survival? What does the new pharma playbook actually look like now? Well, it really all boils down to this one powerful idea. The strategy that's emerging is this deliberate pivot. It's all about selling off those lower margin, traditional parts of the business to free up cash, and then taking that cash and pouring it into these complex, high-value areas like biologics. The bottom line is this. Companies are exchanging physical space for financial profit, and they're trading old technology for a bigger slice of the market. That right there is the new playbook.
This whole transformation is happening as we speak, and it leaves us with a really critical question. As all these giants reshape themselves, who's going to win? Will it be the aggressive gold rush prospectors, the disciplined architects of transformation, the big players betting on scale, or the diversified giants? The choices they're making today are, without a doubt, going to define the entire next decade of medicine. For a deeper analysis, you can find more information from the source material over at www.hdnresearch.com.